Take a look at this chart here. You see the move up. As soon as you get red to green, you have to be careful of getting or staying long. See this laser right here? Let me back it up. It's red on the way up. You get this big up bar right there. It's red. Just watch it right here. So that's bullish. It's bullish. It's bullish. It's bullish. It's bullish. Green. Now you have to question if we have more upside. That's all. Doesn't mean you have to get short. It just gets you to start scratching your head. Sure enough, gets real green right there and then goes down. All right. Now, let's go back all the way to about 44 minutes after 8 o'clock. And we had I think a moment where, was it right in here where we breached? Right here, these two blues. Oh, this is what I wanted to say. Not only do you have a blue here, can't really go up, pink goes down, blue can't really go up. Watch when this blue comes in, how quickly we ignore it because sell market orders must rush in. Watch it. You get a blue triangle, which is definitely showing you more buyers who want to buy it than sellers who want to sell it that are in the book. But what does price do? This is where the read comes in. This is what you're doing. You're reading. It never hesitates. That is a really bearish clue. Again, does it make you get short? Maybe. Does it make you puke along? Absolutely. Does it make you stay on the sidelines? At this point, if you want to get long, absolutely. It's about timing because you could have been bullish today and not and pick bad spots and lost money. And you're like, we rallied 80 points. It's because you're picking bad spots. And that's the difference. So you've got to qualify what it is you're doing. And so at 8:50, a few minutes later, we had the pink one get reached back on the way up. But there was another moment right in here. Now, this one, it was a big buy order that came in, 1200, that breached this big pink. But I want to look inside to really show you why the pink was so big. Take a look at the offers that were lifted as a result of this 1199 buy market order. Inside here, there's a 92, a 95, a 112. It's taking plus or minus 3 from this area. That's why you're getting the big imbalance. They were sitting there. There was an imbalance. But guess what? There was also that invisible order called a market order that came in and breached. When it breaches a pink or a blue, it's what I call invisible orders, which are just market orders. I call them invisible because you don't see them until they hit. You see limit orders, but you don't see market orders. So it's important to understand why a breach happens and why it's bullish. Now, this one would have happened too quick. You couldn't get on the team because in a flash, it just goes up like that. Then there was a moment in this session to, and all session long, there were way more qualifiers to be on the long side than the short side. But again, if you don't have good qualifiers, you could have been bullish all day and lost money on an 80-point rally. All right. So let's say you get this hat trick. You get a big market order, 200 buy order. You get a buy iceberg and a blue triangle, and we run up. But that's not actually what I wanted to run this for. I hope I didn't pass it. But we were sitting on the green. It's probably down in here. We were sitting on a green. There it is. We were sitting on this green potential support. We're just sitting on it. You can't just buy this. Imagine buying it because it is really good support and then sitting through all this. It's not going to work. You're just going to doubt the trade. You're going to end up scratching it or taking a small winner or loser only to see it run. But if you wait for qualifiers, 1, 2, and up we go. So the point is, you get long in here just saying, you know what? I'm going to take a shot. I already got good support. I'm already bullish. And I'm going to let price tell me if I'm right, wrong, or not. Okay. Not only did you get 1 and 2 blue triangles, but you got the laser to flip and go red. What does the laser mean? The laser means shorts are coming in. So they jumped in, more shorts, more future buyers. What do you need for the price to go up? More future buyers, not just buyers, more future buyers. And so you're hanging on this green laser or a green dotted line, which is a PWAP. That's great. But if you just think you're going to lay bids at good support, lay offers at good resistance, and think life is good, it ain't going to work. And then what do people do? I need better support and resistance lines. They think they need better areas. No, you could have terrible areas if you got good qualifiers. If you have tools that allow you to read the real time and make decisions that stack probabilities, you could actually have poor support and resistance lines. So now if you have good support resistance, great areas, and the qualifiers, the ability to allow you to execute, which is everybody's weakness. And I don't even have to prove that to anybody. Everybody would admit that when you're trading poorly, it's execution. If you've never traded successfully, it's always been execution. Everybody would admit to being their number one weakness, or certainly a weakness that they have. And it's the fire in the ready, aim, fire progression. Some people are good at their opinion. They're bullish, and generally they're right. They got good areas. They don't have good qualifiers to know when to buy it, get long, when to sell and get short, when to get out. So you got to break it down and you got to qualify and give yourself the ability to read the market, which how do you do that? Well, you got to get the right information. All right. Once you filter out all the noise and all the irrelevant information. So now you're in front of the right information. Well, what's the right information? Well, for starters, it's new information. The new information is always going to be the best information, period. The new information. So you want to be close to when the new information hits. And then you got to read what price does when it gets hit with this new information. If you're getting more buyers who want to buy it than sellers who want to sell it in here, that's new information. And the triangle is making you aware of that. How is price going to read it? If you get new shorts that get introduced to the market and there's more shorts than longs, that's new information, right? And if there's new information and you're pretty close to when new information hit, now you have an edge or certainly an advantage over most of the rest of the market. What's the best new information in the world to have? Might be earnings to a stock. Well, they don't let you trade, right? That's insider trading. How about Trump's posts? Wouldn't that be great new information to have? Of course it would be, especially when we were a couple years ago or last year in April 2025 with the tariffs. Remember Liberation Day? Do you imagine if you knew not only what that day was going to be about, but then also when a few days later, I remember the progression too. I think it was on a Wednesday that they said they were going to do the pause, a 90-day pause or whatever. And that was extremely bullish. Imagine if you had some insider information about when that new when that new information was going to hit. That's the edge. The edge is always information, order flow information, geopolitical news, but then you have to know what to do and how to read it. You got to be able to read it. This dotted line is new information for most people that aren't aware of it. Position weighted average price. If you take all the longs that we've flagged over the last hour and take the number of contracts and what price they're long from, average it, that's a green dotted line. And so the market over the last hour is long from where? This green line. And it adjusts. It's short from where? This red dotted line. That's important because your job is to read the market. And stop worrying about how you feel and start thinking about how the market feels.